we become buyers of dips. That's the point of that trade narrative. And what we were talking about this morning was the Sonya narrative. Now, we were saying, what the hell, who is Sonya? Who the hell is Sonya? Nobody knows Sonya. So obviously when we're talking about the Sonya narrative, we're talking about the short-term interest rates for the UK sterling market. These are bank funding rates priced in sterling for overnight unsecured loans, So when we look at Sonya, we're looking at a market that tells us about the same, very similar to the Federal Reserve markets. It's obviously unsecured overnight banking for banks themselves. So when we look at the Sonya rates, we're obviously trying to figure out what it looks like. And when we're looking at this, this is priced in par. So this is always priced in par, guys. So we don't get anything else except for this priced in par itself. As we go out through the Sonya December, through to the U's, through to the H's, through to the Z's again, 2023, you can see all the Sonya rates. And obviously, if this is dropping, that means rates are going up. If this is dropping, that means rates are going higher. The difference between the top line and the purple line is the Sonya curve going out for 2.5 years. So the Sonya curve going out for 2.5 years, this is what it looks like. This is what it looks like. So this Sonya curve going out 2.5 years enables us to compare that to the UK 2s10s curve. Looking at the UK 2s10s curve, this is what it looks like. Almost exactly the same. If that curve is what you're looking at when you're trading, we should be long sterling from low prices coming into a Bank of England report. Coming into a Bank of England report, which is what we're coming into this week. So coming into a Bank of England report this week, we want to be buying dips. We want to be buying low prices. And that's exactly what we talked about in the tweets. That's exactly what we did this morning. And it wasn't just a low price. It was a new swing low. It was coming into the London Open. It was 7 o'clock onwards. And the takeaway from that trade has been unbelievably strong. 38s to 39.25s, 125 pips. 125 pips, guys. Now that is a fundamental trade par excellence. There's also technical aspects to it, getting the levels, getting the liquidity. And this is always that stupid fight about technicals and fundamentals and all that kind of stuff. Which one's best? Which one's best? Nobody has that discussion. It's not about which one's best. It's about combining elements. Technicals gives us liquidity, gives us location, it gives us structure. Fundamentals gives us reason. Fundamentals is backed by relative value studies that shows that that reason is actually being traded by the institutions. And because of that, we can obviously start understanding sterling a little bit better about buying on dips. If you haven't seen the tweet, you'll be able to see it in a second. I'll bring it back across because it's such a nice little easy to read tweet. And very, very simple. We have a couple of caveats in there, which obviously obviously they're not going to come out at the present moment, but they might come out during the course of the week. And the caveats are here. We can see here, cable, with some banks increasing growth forecasts. Well, it's not just growth forecasts, it's inflation forecasts and employment forecasts. Unfortunately, we don't have enough tweetable space to write everything. We will definitely see plenty of interest on dips through to Thursday unless there's any unwinding of sentiment. There wasn't any unwinding of sentiment this morning. Scottish elections on Thursday may also play a part on any new opinion poll showing any SNP majority will weigh on sterling. Sterling will be sold off on that. And we can obviously watch those opinion polls as they develop, or exit polls as they develop. But obviously all eyes are going to be predominantly on the Bank of England. But also as a trader, your eyes should be on the 2s10s curve. 2s10s curve bullish, market thinks Bank of England. Bullish, hawkish, bank tapering announced, perhaps. bringing forward interest rate hikes, perhaps that's definitely going to be a big positive for US 10-year yields for sterling, bringing forward interest rate hikes, and obviously the Scottish elections. If there is no clear majority, that's going to be positive sterling, and that should also be positive for the pound going forward, for the markets going through Thursday as well. So watch for these things. If you're a sterling trader, we've already made our week's money on sterling effectively on that one trade this morning. We did shout about it this morning. We did call it out this morning. We did talk about it this morning, and I says, macro-wise, I am only a buyer. I'm buying on pullbacks. And if you decided to do any business on the pullback, you've obviously joined what turned out to be a brilliant buy-side trade, guys. Crazy good. Lovely outcome. And that's how you deal fundamentals, guys. That's how you deal fundamentals.